Thank you. Welcome, everyone. most most businesses owners that have applied for the PPP loan funds have been funded. There are still applications not funded out there that are still in the process. Um, and this is almost a case of be careful what you wish for, because if you don't pay the right things back at the right time, you're going to end up with loans that can't be forgiven, or loan balances that might not be partially forgivable. So I think everybody kind of knows the principles of it. It's been talked about quite a bit in the news. But you use it for payroll costs, rent, utilities, and a few other items over the 8 weeks immediately following the receipt of loan proceeds. So as soon as you get the loan proceeds, you need to make sure you're tracking the right things. This says 75% must be used for payroll costs. At least 75%, that really should say. At least 75% must be used for payroll costs. And in order to get that calculation totally forgivable, you have to maintain pre-crisis employee level. And there's been businesses that have been funded and still are shut in. So I think that might be what they're talking about, extending that the cost tracking part of it to a longer period. You can only have you can only cover up to $100,000 per employee. So if somebody's making more than that, it doesn't count in the forgiveness program. You need to keep track of things. Set up a separate bank account for these funds. Make sure you calculate the eligible expenses and transfer the funds to your operating account. You don't want to commingle loan funds. That's probably the quickest way to get in trouble and not have the forgiveness. And so you have to keep good records. Once I get through this slideshow, there's only, I don't know, 10 or so slides in it. I'm going to show you some example worksheets so you can understand really why it's important and how complicated it is. So again, this starts the date of the loan origination and then 8 weeks starting the date of funding. So if you already have the money, you already got to be worried about it. And you got to give all the documentation required, and the list is long, to the bank after that 8 week period. The bank needs to figure out if the loan is forgivable or what portion is forgivable. They submit that actually to the U.S. Treasury through the Small Business Administration, and that's the bank gets the loan at the money at that point in time. So here's some example documents needed. Payroll costs. We use here, most of the time we pay with checks, and we have multi-part checks just because it's a better audit trail. So we're keeping a copy of the check stub with everything that we're paying out under this. You got to have a signed lease agreement, and there's a key date on that, which is February the 15th of this year. You have to have had a lease in effect since before then. And that date's important for some of these other things too. Utility invoices, because they have to be incurred and paid within the 8 week program. So if you're behind on a DP&L bill or something, that doesn't count in the calculation. You can't put it in there. And those have to be for contracts before February the 15th as well. So if you're paying a phone bill or a cell phone bill or something like that, you got to show you had that contract in advance of that date. So one of the things I would discourage people, I guess, is other than making transfers from the savings account that you're keeping the money in into your operating account, you should try to pay everything with the check instead of if you do online transfers and so forth. It's better evidence of everything. Payroll rules. This is where it starts to get really strange and difficult to understand. And you look at total payroll costs in those 8 weeks versus average payroll costs in the previous year. That statement sounds simple. Average payroll costs in the previous year. It's a very cumbersome calculation. And so when we get to the worksheets, I'll show you some examples. It still seems very complicated, but at least the worksheets that we've developed help people decide which payroll base to use and in these calculations. So the part that becomes unforgiven is a 2-year loan. You pay 1% interest, payments are deferred for 6 months. And as you can see, it's real easy. You get the example I have, I think it's 150,000 or somewhere around there. And real simple, that particular example, they're going to have 28,000 that's not going to be forgiven. So that's an awful lot of money to pay back in 2 years. So that's why we're really trying to make sure people track this. Debt forgiveness is excluded from gross income. However, this next statement I don't think is true any longer. The money's free, but you can't deduct the expenses, so which is kind of weird, but one offsets the other. I just as soon have somebody give me the money and I spend it on something. But so again, debt forgiveness will be reduced for any employee cuts or reductions based on formulas. And regarding if you have employees that you haven't rehired, as long as you rehire the same amount of employees by June 30th and make up for wage reductions, that part of the loan should be forgivable. Anybody whose pay has been reduced by more than 25% counts less in the calculation. Again, does not include employees making more than 100,000. And there's a lot of additional guidance, coming out almost every day. And so everything I'm saying here is subject to change at the whim of the SBA and the IRS. So you need to have some priorities. I think the number one priority you should have is make sure that to the extent possible, your loan is totally forgiven. And retain and retrain workforce is what I've been telling people. And then you got to have, after the 8 weeks are up, you're going to need money. So you got to make sure you have liquidity to continue there. So balance the 75-20 rule, 25 rule of payroll versus non-payroll eligible expenses. There's a budget. We started with a pretty simple worksheet, and it's gotten more complicated as we've had covered more things. But you can pay like for example, our firm. We just got through busy season, although really the tax day was legally changed. So we still haven't had tax day here in America yet, but we pay a bonus every year after that. So bonuses count. You can't just pay a bonus if you don't have a plan for it. And paying people to be on call, even though if they're working from home, you can pay them to be working from home. Like anything else, people that play games, I think they're going to get caught in the end because they can't document everything correctly. So monitor your plan. We've got 8 weeks lined up on a worksheet, and we're looking at it every week because we want to make sure that we follow the rules and maximize our clients' loan forgivenesses. And like I said, changes are likely to be made, and especially documentation requirements could change. Lessons learned. I've always told people for years, you try to borrow money before you really need it, because when you need it, nobody will loan it to you. And we're lucky that the government stepped in to do this. I don't think people understand what the ultimate long-term cost of this is going to be. But anyways, if you never had an SBA guaranteed loan and you get this, you now have an SBA number. Having that in the future makes it easier to file for an SBA loan. And if your application is missing info, you probably heard about it by now from your underwriter. And this is the time where you probably want to be involved with more than one bank, because I've seen it happen over the years. Somebody works with the same bank for 30 years and all of a sudden they're cut off. So you need to be able to have a backup plan for this. Again, think about, you need at least 3 months of cash flow once this 8 weeks is over. And one of the things you gotta do right now is make sure if somebody owes you money, that you get paid that. And, a lot of people are changing payment terms and so forth. A lot of businesses is not as simple as sending an invoice. So I understand not everybody's going to have these issues, but you need to worry about those. So let's see here. That's my 15 slides. It took about 15 minutes, so I'm on schedule here. I want to change this other screen. Which is okay. Does everybody see this thing that says review this list of qualified expenses? Are people seeing that?
Yes, yes.
Okay. Yeah, I called this, it has a very complicated name, review this list of qualified expenses for maximum forgiveness on your loan. And like I mentioned, a lot of these have been funded. Salary and wages, a minimum of 75% of the money needs to go to that. Now, just because you're spending 75% on the payroll, that's not enough of a calculation maybe to make sure it's forgiven. Documentation, again, we've talked about that a little bit. Healthcare benefits, especially if you have employees and you have a group health insurance plan. Those, again, it says the premiums incurred and paid during your 8-week period are considered qualified expenses. Documentation needed, health insurance premiums, you got to make sure you have a bill that shows it was incurred and paid during that period. Retirement fund planning. This is an interesting one because those are eligible expenses. Now, you have to be real careful if you're the business owner exactly what may be covered. We do not have final guidance on this as yet. Rent expense, again, I mentioned that period, February the 15th, 2020. You got to have a lease in effect before that time period. Also on the list is business loan interest. So if you own your building in your business, the mortgage payment is considered a qualified debt obligation, sort of just like the rent payment would be. Also, if you have any loans secured by a personal property, so that could be a truck, that could be computers, something that you have a loan on money that's not a mortgage on real estate. That is included to the extent the interest is incurred and paid. Utilities. There's even some question on that, and it says described by the SBA, and there's actually separate frequently asked questions. There's an amazing amount of detail out there that doesn't provide the best guidance. We're holding that if you have a cell phone that you had in place before February the 15th, cell phones and landline phones are deductible. So is internet. I don't know. We're paying, I think we paid $19 a month for Zoom meetings. So it's not that big of a deal, but I would count that in today's world as a utility. So we're putting that in there, and hopefully we have enough other stuff to not have to worry if that gets questioned. And then finally, non-payroll related expenses. So those other ones that we just talked about, they can only equate to 25% of the forgivable amount. So you should stay below that threshold when you submit your documentation. Now I want to specifically switch to the budget worksheet that we use. Is everybody seeing that? It says PPP usage budget example.
Yes, sir.
So this part of it seems simple, and we started with needing to track actual expenses. I don't know, we've had dozens of clients get financed by now. So these dates changed, obviously, depending upon the date you get funded, and you get 8 weeks. You get 8 weeks to spend the money. And then so over here, we're starting with the budget, what we believe people are going to spend over that time frame. And then obviously the question becomes, how close are you to being forgiven? And you can see in this example, they got funded $177,000. 38,000 is going to be the unforgiven amount. So again, even with 6 months deferment and 2-year payment terms, that could hurt you in the long run. So it matters. This says non-Schedule C filers. What that means is people that are sole proprietors. They don't have a corporation or something in there. The rules are a little bit different, and of course more complicated. Here's an example of calculating the full-time equivalents. Again, full-time has not been legally defined yet. So we're going upon, that's the American Institute of CPAs has provided a lot of guidance in this area. And because there's already guidance out there, legalized by the Affordable Care Act from a few years ago, we're putting a 30-hour calculation in there. You can see here you have 2 choices as far as a comparison option, and you're allowed to choose the one that gives you a better result. So what's that mean? You need to do both calculations. Okay, so you got to compare these hours to what you need to cover now. And you can see here, like the legislation says, you have until June the 30th to make up for if you're short full-time employees or full-time equivalent employees. And down here it calculates, okay, if they use option 1 in this particular example, they're short compared to the percent they need to have. And in this second option, they're better off with that. Then finally, I'll show you this other worksheet. Again, this worksheet here, we started off making sure that everybody's tracking their expenses every week throughout those 8 weeks. And on any given week, you know how much you're going to be over or under and what you got to do. The second worksheet we did is making sure at the end of it, people know what is forgivable and have all the correct documentation. And so we have, in this example, these people got 172,000 almost. And so they are not meeting all their loan forgiveness amount either. And these are calculating, another way of calculating full-time equivalents, actually by looking at each employee. And you have these chances, these choices, these options to figure out which one works better for you, and you're allowed to use the one that's better. And if you have any employees that their pay was decreased by more than 25%, you got to calculate that too. And so you can see there's an amount that's not forgivable in this example of $3,077. And then here I've got most of the SBA loan language talking about this because that's the only way I could figure out how these calculations actually worked. There is some other pretty good information out there, and I don't know, I don't even know who sent me this one, but there's someplace called First Horizon Bank. I don't even believe it's in Ohio, but if you go to firsthorizon.com, there's a preliminary forgiveness information and checklist for this program, and it's 2 pages. And it really defines a lot of the evidence that you're going to need to be able to submit with your loan calculation. Well, let's see here. That's sort of the end of my prepared materials. I don't know if we've got questions and so forth.
Thank you, Dave, for doing that. Let me see what I have. Actually, Jerry, I'm just going to let you ask your question.
Actually, it was a different one than in the chat.
Okay.
On the first worksheet that you had up, there's an area where you've got the $10,000 EIDL payment in there. I'm curious why you brought that into the PPP worksheet.
Well, because again, we haven't had final guidance on this, but if you look at the history of EIDL, those loans have been around forever, and they have given advances in the past, but that advance is typically, my understanding, if that's all you got, that's all you applied for, and you got the EIDL, it's a grant, it's totally forgivable. Otherwise, it gets refinanced into this. That's why and that may not be the final rule, but we're putting it in the calculation just in case.
Do you have any other questions, Jerry?
Oh, I have hundreds.
Oh.
I just wish there were more answers out there. I thought I saw in the release they put out 2 days ago that they are defining the full-time employee as being a 40-hour employee instead of a 30. I know it's where the source I saw said it's still being argued both ways, but I thought the new release defined it as 40 hours.
Well, I haven't heard that myself, but I'm in a group of CPAs. We meet almost every morning on Zoom at 8 o'clock. And somebody was mentioning changing that calculation. So we would, if that's guidance from the SBA, or really the IRS for that matter, then to be safe, we're going to put that in there and make sure. Obviously, it reduces the number of full-time employees you have if they define it that way. I mean, it's a weird, we have people that only work for us during our busy season. And so, that would be an interesting calculation one way or the other. I guess we'd have to figure out 30 hours versus 40 in this calculation here. But
I also saw in the update they've changed when your 8-week period starts. Initially, they had said that 8-week period starts on the day you're funded, and now they're saying that you have the option of using either the date you're funded or the date of your first payroll.
yeah, I mean, obviously, I guess unless that happened on the same day, I heard they were trying not to fund on Fridays to cause that very kind of a deal. I don't know, but
well, they're running into it, particularly where people are maybe paid, biweekly or monthly, having a different start date. And so it was in the update, that 3 pages of changes that was out just a couple of days ago. They were saying that there was an option. They specifically mentioned it as being weekly and biweekly, but I have to wonder how that works with a monthly employee. Could you effectively put off that start date for 3 weeks? Let's say if your next payroll wasn't until 3 weeks after you were funded. I don't know.
Yeah, we got somebody in that situation. They only do pay. They pay monthly at the end of the month. So
we're in the same spot. We pay monthly at the end of the month. We got funded mid-month. So it definitely affects us. But again, they don't address the monthly question. They just specifically talk about weekly and biweekly and giving you the option. But they don't say anything about a monthly.
Well, I do have in this list here. Yeah, so this really falls under the retirement plan option, but some people only pay that monthly or maybe less frequently. And so we're trying to say you got to establish a pattern. So that's why we say pay the retirement plan at least twice in that period to reflect monthly contributions.
That update also did clarify the deductible expenses, and you hit on that early with what you assumed they were going to do, but they did do that in the release 3 days ago. If you take an expense through PPP, you are not allowed to deduct that expense for income tax purposes elsewhere.
Yeah, and the reason I expected that, they have several other rules that are similar to that, especially tax credits. Back when we had, depreciation credit, if you got a tax credit, you couldn't deduct that amount of depreciation. So it was kind of created this weird circular calculation. So at least it won't be that difficult this time. It's going to be, whatever you got forgiven, you can't deduct. And like I said, that's all, and I think it's going to cause other problems down the road, not the least of which is the IRS, between them and the Social Security Administration. They generally try to reconcile the amount deducted for wages on the tax return with the amount of wages they paid in W-2s with maybe some accrual rounding errors and so forth. But that's going to be a big difference this year, and so it's going to create a lot of problems, I think, with year-end tax returns, especially people that don't. If you don't realize that stuff's not deductible when you're looking at a P&L, when you get closer to the end of the year, you're wrong by a significant amount, probably. So.
All right, I have a kind of a long question. So someone wants to bring back their full staff, but due to CDC guidelines, they cannot. Do you have any suggestions, or does it matter? And can they give everyone a raise to reach the amount they need to use?
Raises, I think, are going to be prohibited unless they're out. Unless, again, it's part of a plan. That other question is difficult. I mean, we're fortunate here. Our building. Either everybody already had their own office, or our reception area we split up a little bit differently. But even then, we're not all here every day. There's about half of us on any given day. We've been able to work from home for years, and we've always provided the technology to be able to do that, just to help people more support their families and when we're real busy. But not everybody can work from home. The people that put our returns together and so forth, we still do a lot of paper, send out stuff in the mail and financial statements and so forth. And it's not like you can really do a lot of that from home. But even then we switch up, and they're in different days sometimes. But yeah, if you have people that can't really work from home and they can't have, they can't be socially distant in a job, I will say this, and I just heard this morning from the CEO of Walmart, and this is incredible in and of itself, but in the last 3 months, they've hired 240,000 people in the United States, 240,000 new employees. That's 2,000 a day, I think they said. But he is a member of the Business Roundtable. So if you Google that, Walmart was instrumental in, they really, everybody wants to talk about evil Walmart and so forth, but they really do believe that in this time, they got to support small businesses. So they developed a lot of guidance, specifically being involved with the Business Roundtable. And you might take a look at that resource on Google. I believe those people are kind of appointed by the president, but they typically serve for a number of years. So I'm sure there's a lot of good information out there about that. So you might try that.
The next question I have is, how do you handle furloughed workers?
Well, furloughed is somebody that's not is off, and so they're not, their hours during that time period don't count. And I don't know. There's a lot of state. Again, there's going to be. I don't know what the answer is unless they maybe extend the period or something. But yeah, if you can't pay people to, if you can't have your place open, all you're doing is throwing money away.
Did they change that, Dave? Because initially they were saying specifically that if your employees were unable to return to work because of COVID, you could pay them anyway, even though they weren't working for you.
That's true, but there's a tax credit for that, but you can't implement it if you have PPP funds. So
you can't get the tax credit, but you can still use PPP funds to pay them.
I'm not sure of the exact answer of that.
I think with the new guidance that literally just came out, don't mark my word on this, but there's what they give I forget exactly what they call it, but for as far as payroll deductions and FTE deductions and loan forgiveness, they give you, if you're able, they give it some sort of term, but basically if you're able to attest to the fact that you rehire that person at the same pay scale, it has to be the same, by June 30th, then
you're right. But that goes in the full-time equivalent calculation, not the payroll dollar calculation.
Yeah, I think they added that. I don't know. But like you said, Dave, this has changed. Literally, it probably changed in the time we've had this this webinar. So it's changing constantly. But yeah.
All right, well, does anybody else have any other questions? If you do, you can just unmute yourself and ask them if you have a mic.
Dave, have you seen anything or heard anything about the self-employed people and the loan forgiveness and anything about how that's going to be?
Yeah, there's an example of that. It's on that other worksheet. And it doesn't exactly show this, but you're really if you're self-employed, you're limited to what your net profit would be in some base period. And this does not reflect that. Well, you can see here, you take Schedule C from 8 weeks out of your 2019 Schedule C, and that's what you're allowed to receive for yourself. I don't know if that's the right base time, but 2019 is probably better looking than 2020 is for self-employed people right now. So I guess I'm not sure why they chose that period, I suppose, but that's what I was talking about. I'm not sure that's right. That's right based upon the rules.
Well, does anybody?
Thank you.
Go ahead, Tim.
I just said thank you.
Okay. All right. Well, if no one else has any other questions, this was recorded, so I will have that out to everyone this afternoon, so you can go back and listen to it. And if you do have questions, Dave will probably answer them via email if you need to. But other than that, thank you, Dave, for the presentation.
Yeah, I'll just close by saying, the stuff is devilishly complicated, maybe needlessly so. I hope I didn't scare anybody, but you might want to get some help, because like I said, when the 8 weeks are up, if you've messed up, there really isn't a second chance, at least under these rules here. And if anybody has any questions, my email, send it to info@murray-cpa.com. info@murray-cpa.com.
I will add that in the email for everyone too. Well, thank you, Dave, and thank you everyone for getting on our webinar this morning. You guys have a nice day.